And in our top business story, the volume of announced and planned projects in the UAE in 2014 is expected to be valued at $315 billion, and as of May, $212 billion worth of construction projects are currently under construction. According to EC Harris's 2014 International Focus on the UAE report, the UAE's construction market is predicted to return to near full capacity, with a number of mega projects in the pipeline and the ramping up of social infrastructure spend. The report takes into account the UAE's estimated real gross domestic product growth, accelerated momentum across industry sectors, market conditions and construction tender price levels. According to EC Harris's Construction Cost Index, construction prices in the UAE are set to rise by 4 to 5% over the duration of the year and approximately 6% in 2015. Furthermore, the report highlights key discrepancies between the Emirate of Abu Dhabi and Dubai, as both cities are the country's growth drivers. Dubai's real estate market is stronger and more sustainable, whilst Abu Dhabi's market is steady. However, the report states that capital may increase construction spend in the latter half of 2014 and early 2015. Last year saw a double-digit increase in outstanding credit card bills in the UAE, according to a new report by consultancy firm the Lafferty Group. The country's improving economic environment contributed to a 21% increase in consumer credit outstanding during 2013. Improved customer confidence, growth in borrowing capacity and more relaxed consumer credit policies also contributed to the significant increase in consumer credit, the report said. Billed volume per credit card has been growing in the UAE as a result of the growing proportion of premium customers in the credit card base. Although premium card customers comprise between 25 to 30% of the total customer base, their spending constitutes around 70% of total credit card billed volume in the UAE. The Islamic Financial Service Board's revised capital requirements for Basel III could help to strengthen the Islamic finance industry in terms of capitalization and liquidity management, according to credit rating agency Standard & Poor's. Basel III's primary goal is to increase the level, quality and global consistency of regulatory capital and to standardize the required deductions and adjustments. According to the standard, each bank's Tier 1 capital should enable it to absorb losses while it remains in business, and categorizes Tier 2 capital as a reserve to protect the creditors in the event of insolvency. Standard & Poor's stated that they expect the revision of the capital definitions within these standards to have a limited impact on Islamic banks' quality of capital, given their limited use of derivatives and securitizations. Very few such structures are recognized as Sharia compliant, and they are not currently widely used by the industry. Over the past 2 years, 3 UAE-based Islamic banks, including Abu Dhabi Islamic Bank, Dubai Islamic Bank and Al Hilal Bank, have opted for Tier 1 sukuk issuances totaling $2.5 billion. Issuers of these sukuk say that they qualify as additional Tier 1 or AT1 capital under Basel III. And RAK Bank has reported net profits of 700.4 million dirhams during the first half of 2014, with solid growth in all lines of business. The net profit levels were, however, a drop of 59.6 million dirhams over the same period last year, which, according to the bank, was due to more normal levels of provisions for bad debts after lower numbers in the first half of 2013. Customer deposits also increased 2.4 billion dirhams over the end of 2013 figures to reach 25.5 billion dirhams. Additionally, the bank reported that their total assets grew 21.8% year-on-year to stand at 34.5 billion dirhams. Similarly, gross loans and advances grew 12.9% year-on-year to reach 23.9 billion dirhams. The bank is also reported to have witnessed an increase of 10.2% in total operating income compared to the same period last year, to record 1.7 billion dirhams. Commenting on the figures, RAK Bank CEO stated that they will continue to focus on the SME and commercial lending, which was identified as the major engine for the bank's growth.
It's not so much did our profit drop this year, it was last year's profit extraordinarily high, and it was. Our bad debt level on some of our loan portfolios was zero. Now that's, it's circumstances, it's sort of right backs from the global financial crisis, various things. But I think what we're seeing now is a level of bad debt that is, I would consider ordinary for our level of business. So our focus now is on much more on growing the top line of the bank. In the first half, our revenues grew about 10%, 150 million, up front. So a phenomenal growth in top line. So the whole paradigm going forward is to try to make sure that we keep the top line growing, contain costs within a reasonable level, and the bad debt will be what the bad debt will be.
The performance figures come at a time when the bank introduced an additional cardless withdrawal service for M-banking called Mobile Cash. The service allows their customers to withdraw cash or send money to their beneficiaries from the RAK Bank ATM machines by simply entering a code. The new Mobile Cash services runs off their mobile banking app, where customers can acquire a one-time password via an SMS, which allows the user or beneficiary to withdraw up to 5,000 dirhams within 24 hours. According to the CEO, this service should offer convenience and increase the use of M-banking service.
In our case, we have almost 3 times the number of internet banking customers as we do mobile banking customers. I think part of that is that under internet banking, you can do a lot more, right? You don't have the sort of cut down menus and so forth. If I want to, do a lot more detailed stuff, send, complicated overseas transactions, I can do that on internet banking. On mobile banking, you will always have sort of greater limitations, but I think services like this really just add a whole new element to mobile banking. I mean, I wouldn't bother going onto an internet platform and sending cash to you. I'd much prefer to be able to pick up my phone and go, I'll send you 500 dirham or whatever it is, and it's done. But functions, functionality, services like this, I think really, improve the customer experience and make life simple.